looking at more of a potential downtrend, likely going into the week, similar to what we experienced through this week. So we'll be looking out for that. Quite a few earnings as well, which can be pretty important. I think the markets will be dictated, in my opinion, more so on some of these macro events and catalysts, such as the Wall Street bets versus Wall Street saga that we're seeing unfold. So I think these will kind of overpower and kind of dictate the market movement much more significantly than anything else. But yeah, I'll still mention the earnings this week. Quite a few significant ones. Alibaba Tuesday pre-market, Pfizer, UPS, Exxon, BP, all reporting the same day. That same day on Tuesday, after hours, there's Amazon, Alphabet, Chipotle, and EA, which are quite significant. Spotify on Wednesday, eBay, PayPal, Qualcomm on Wednesday as well. Align as well. So quite a few. Pinterest, Snapchat, reporting on Thursday. Estee Lauder on Friday. Yum Brands Thursday as well, pre-market. So quite a few earnings next week. So it will be interesting to see. We'll go over some of the things that are occurring currently, and kind of discuss what we believe are the kind of predicaments that could occur as a result of these macro events that are occurring that we're seeing currently. So yeah, I'll pass it on to DJ though, which will go over his usual SPY analysis, and then we'll pick it up from there.
Yeah, so just gonna go ahead with the usual analysis for SPY. This week is quite different because this is the first week in a while that we've seen significant movement, especially to the downside. So we'll start with the daily chart on SPY. We pretty much hit all-time highs, 385, and then just dumped very hard, about 16 points to the downside. Quite significant 4 or 5% move down. We did break bearish temporarily. This daily EMA is very important to watch for. So just going to bring this up. So these EMAs are very key. The last time we broke down these EMAs were here. We managed to buy the dip and continue higher. But the key is that last time when it broke under, it retested the EMAs, retook it, and continued upwards. Difference here is we actually broke down that same EMA on this day. We bounced, retested, went above, gave it all back, rejected the blue and brown line, and now we can sort of see that right about here, the EMAs are starting to slope downward. So throughout the last 2-3 months, we've seen consistently daily EMAs sloping upwards, pushing up price action. This might be that first little inflection point where the EMAs on the daily start trending downwards, and because of a downward trending EMA, we're looking for a downward slope and price action towards the downside, especially with the hard rejection on Thursday, where we gave back a significant amount after retaking the daily EMAs, followed by a Friday break of lower lows compared to Thursday. And now we're retesting the daily lower Bollinger Band. This is about as bearish as it could get in a week, I would say. So next week, it's pretty important. Right off the bat, we hold the low of Friday, 368 something on SPY. We drop this, we drop the lows, we drop the lower Bollinger Band, and the next key area of support is roughly 365, probably 364.50ish on the previous lows of that daily chart. We are looking for a little bit of a bounce up, retest the EMAs, which will likely fail in my opinion, and then we would look to retest lower lows. And if we do in fact break, this could be a start of a new daily bear trend, which we have not gotten for some time. If we don't get a bounce on Monday immediately, then this could look very bad, as the likely scenario is to hold Friday's bottom on Monday, see a little bit of bounce and recover, give some time for people to exit some more long-term positions. If we just straight up dump Monday and we open here and collapse, it could just get very, very ugly, but very oversold in the short term. Taking a look at SPY weekly, it's a significant red candle on the weekly, high volume, close right under the weekly EMA here. It hasn't happened once again since October. The last week we closed under the weekly EMAs was over 3 months ago. So any trend that happens the first time in multiple months is very, very significant in my opinion. At minimum, I think we see a pullback to 360. Long term, it's still healthy, but short term red flags, I would say. Hourly chart on SPY, gap down, bounced off the gap, filled half the gap, lower lows. RSI oversold, but continuing to push down. So once again, just take a look at the daily. We'll just need to hold Friday's low on Monday to see a recovery bounce. If we don't, it'll flush very hard. Short term, QQQ, similar to SPY, hit all-time highs, and we're giving it all back. Broke daily EMAs, both lines. And in fact, QQQ is a lot more bullish than SPY because the lower Bollinger Band is quite far away on QQQ, whereas SPY has already tested it. So tech is holding up relatively better, I would say, on the chart, but it does follow the same sort of pattern overall. QQQ weekly actually held the weekly EMA, so we'll see if tech and QQQ drop the weekly EMA next week. Does expect some sort of pullback as well. Short-term pullback is likely to occur, in my opinion, after a bit of a bounce early next week. And I would say where we're looking at probably a pullback to the 360 range on SPY at minimum, I would say. And on QQQ around 296 to 290 range. If it gets accelerated and panic seeps in, which could very well happen, and it could get significantly worse. But for now, just gonna play by the chart, and it's simply we're just consolidating a little bit. So there's that. I wouldn't say there's really any reason to be in a lot of long equity positions, as we've been saying for multiple weeks now. Regardless if this is the bottom of the dip or not, it would be much better just to confirm that the markets are okay, the situation is fine, and then to just make entries again when the charts shape better, when the sentiment is better, and the market's more stable. Making an entry here, I mean, risk reward, I would say, is much favored towards the downside. So which is why we recommended to exit and scale out a lot of portions of positions that we're holding throughout the week. We want to have a very strong cash position. Myself, I'm about 70 to 80% cash. Looking to do a little bit more. I would actually recommend a higher cash position, probably closer to 90% or higher. The only reason I'm still in Summerdove is because I'm in quite a few of SPACs that I really like in the long term, and some ones that are very close to net asset value. And I'm also risking some profits just myself on the CCIV trade or the merger deal, but that could go very wrong in itself. But I'm willing to take that risk myself. Overall, I think downside bigger than upside for most of the markets and equities. And we'll have to see what happens heading into next week. Of course, SPY QQQ is major importance, but the biggest thing that I'm sure we'll be covering later on, and there'll be a lot of questions, are all about the Wall Street bets, GameStop, meme stocks, the short squeeze, and how all that will play in effect. So that's really the biggest topic, I would say, for next week and perhaps for the coming weeks or month. And SPY and the indexes, to be honest, are not they're not the greatest. And I think what happens regarding the meme stocks will actually have a major effect in indices going forward. So the chart is one thing, but sentiment wise and perhaps even fundamentally, we could see a lot of changes, like potential regulations that we'll discuss later. So as for this week, I'm just going to cover SPY and QQQ, which I went over overall. Bearish break on the daily, just the consolidating on the weekly, bearish break daily for both. Short term does not look good at all. I expect further downside. If it gets very, very ugly, we could see a 10-15% pullback. But overall, I don't think the spotlight should be on these indices, but the spotlight should be going forward on how to play this sort of new market, new sentiment, and new hype over all of the whole Wall Street versus Reddit debacle. So I'm gonna just pass it over to Ramg to cover his stuff for the week, and then we'll answer a lot of questions and what we think regarding that later.
Okay, perfect. Yeah, so yeah, pretty insane week, guys. It looks good though. Just as we kind of predicted, lower lows, lower highs, forming. We see, quite a bit of downtrend. We bounced where we predicted we would bounce. We saw that little bit of a intraday correction on Monday. Clearly a red flag, right? So I'm surprised, more people didn't see it, but I predicted that we would get sort of a bull trap there, which we did. Recovered on Tuesday. We took that time to liquidate some long positions, equities, and go into puts. And for individuals who weren't already in, we opened some new March puts as well, which was great. Really dumped on the Wednesday, recovered a bit on Thursday, and same thing dumped into the weekend. So looks very good. DJ covered it briefly, so I definitely agree. I think we are headed more downwards. Wall Street does not like uncertainty. I think this is about as uncertain as we are ever, really, right? So yeah, I mean, I predict some more downtrend to follow. I also, in regards to equities as well, you should have a large cash position. As we stated, looking and analyzing risk and reward, I don't really see the sufficient reward to warrant the risk of certain long positions. So we've been pretty picky on what we're entering. Really selectively. So we kind of get the most upside with very limited or none downside protection as we can see fit. So yeah, it looks good. Yeah, Timothy posted the charts, a little bit of the weekly chart. I pulled that up here, so yeah, you can see a little bit of a pattern with the red candle. Looking on the weekly, and a little bit more to follow. I posted the daily chart, which I noticed, which is you could see a little bit of a similar pattern. So we'll see how it goes, but yeah, I'm predicting a little bit more downtrend. If you look at what we saw in September, which was a bit of a blow off the top, September 2020, we continued for about 2 weeks and saw about a 10% correction in SPY. So I mean, it's hard to say where we would bottom out, but yeah, I mean, you could kind of just look at it for a little bit of something to base it towards. So yeah, there is that which I've been watching as well. Seeing a similar price movement, so watching that pretty significantly. As DJ stated, QQQ is a little bit stronger, which I thought was best to go into kind of SPY puts more largely. Tech kind of got hit already on this, Facebook, Google, Amazon, some of the, monopolistic regulations that Congress was discussing. Nothing really was done, but just that being discussed, we saw a lot of downside on a lot of the big tech names. On that monopolistic possibility of some breakup or regulation changes, which could have occurred. We saw a large sell off already. So, QQQ it was a bit beaten down already. So I mean, I thought SPY was a little bit of the better choice to hold in a larger position, and then a smaller position in say QQQ puts, which we did. So yeah, guys, great week. We really killed it. Predicted the exact price movements and acted accordingly. Couple plays I'll cover to go over the week. And then we'll touch on some other things and some things that I looked into, and it's pretty surprising and interesting and pretty important as well. So some really crazy things that could play out as well. But yeah, covering the lemonade chart, it was great. We hit the high of 184 on this day, which we liquidated majority of our calls. After that, entered a couple of day trades. So those were good as well. Lemonade, it looks good. I indicated that I believed it bottomed out at that 145 mark. So it looks good, similar to that, but this will be more affected by the macro markets. So I'm kind of just holding a position long, my base position. Everything else kind of just going ahead and day trading it more to be more safe, right, and precautious. But yeah, so it's hard to say where we go from here, honestly, but I think it's holding up fairly strong. So definitely impressed by that. Still holding that base long position that's already up, quite a significant amount from our entries and flips. So it looks good there. Amazon, as I indicated, it broke out of that wedge. But then, we predicted that downside to come, so we got out of our long calls. It was great. Those calls are sitting at maybe, I don't know, $9-10 now. I last time I checked, but I think even maybe lower, probably likely a lot lower. So yeah, I mean, we sold at that $14 mark, which was great. Flipped it for a profit, and then sold at another profit as well. So looks good there. UVXY VIX, really good. We entered those weekly calls and flipped it multiple times for profit here. So on the day after. So that was a great play, guys. Really took advantage of that volatility. Large spike, IV spiked, crazy volume in those calls. So really good. It was a good call. Very safe too. Went right in the money. So at 10.50 calls. So yeah, solid play there. I think even honestly, picking up VIX shares, so shares not calls, just for a long play is actually not bad, to be honest. So I will alert that next week, kind of strategically, where we are on the day, but I think these VIX shares are a pretty good long play just to hold. As we see more volatility, we will see these increase quite substantially, and the downside can be limited depending on where we kind of open. So a good long hold in my opinion. So moving on to Tesla, we are holding a swing into Monday as we expect a bounce on Monday. So it will kind of be a rising tide that lifts all boats. I think Tesla will kind of recover as well and bounce. We had about 100-point drop on Tesla, so quite significant on their earnings. So yeah, it was fairly good earnings. Some kind of negative aspects, but their kind of guidance was fairly good. So there is that. So yeah, I mean, we played this one really nicely. We literally caught the low of the day. At the same time, we sold our SPY puts at that time. Portion of our SPY puts. Still holding the base position, and then entered long calls February 5th, which is next week expiry, and sold it at a profit portion. Some of you guys, and bought back at entry. It dipped a little bit below that as we had a little ugly close, but yeah, still fairly confident that we could see some sort of bounce with some buying. So it's kind of hovering around that midpoint right here. So yeah, it looks good. Fairly confident on those Tesla calls, holding into next week. Eric, just cover that play. Similar to DJ's Nokia and some of the other meme stocks, we had quite significant move. Took advantage of that. Sold on that spike intraday. And then holding just about, I believe, 1/3 or 1/4 of our initial position, just to let it ride, see how high these Wall Street bet guys kind of push it. So yeah, that's a solid play there. Quite a significant gain. CCIV, we a lot of you guys entered some more positions. We were already holding a base position there, quite a bit, as we sold half of our initial position. Some of you guys entered again on Friday before close. So for a Monday announcement, I mean, we'll see if that happens. Hopefully it does. But yeah, it looks good. We had a lot of volume on the warrants and the shares as well. There's some calls as well which we entered. So yeah, significant upside there potentially. So we'll see if that pans out. Hopefully it does. And then just to cover Bitcoin as well. Bitcoin, it actually hit a nice high of around near 40K, and then dipped to 30K, and it's now bounced to around 32. So yeah, Bitcoin, it's holding up fairly well. It really bounced because of a lot of the tension with Elon and quite a few figures kind of pumping it. I think Bitcoin actually might be a good long play to put a small amount of your assets in, to kind of let it ride. Reason being is it's a little bit of a conspiracy theory, but I don't know. I mean, it's not too bad. I follow Elon fairly significantly. Elon has seemed to kind of change his perspective on Bitcoin. There's a small interview that he did where he was asked about Bitcoin, and he initiated a response that was fairly bullish on Bitcoin. So yeah, I mean, Elon has been kind of curious on kind of investing a portion of Tesla's assets, liquid assets, and converting it into Bitcoin. Elon, he changed his Twitter bio to hashtag Bitcoin. So I mean, all speculation, guys. To be honest, all speculation. But I mean, you never know, right? If Elon were to put a portion of assets into Bitcoin, no matter how small, right? So Tesla has a significant cash position. If he were to take 500K, a million, which is peanuts, right? And put it into Bitcoin, I think it will really set a insane precedence to the rest of large cap companies that this is kind of the way to go, right? Tesla is a has been the leader in innovation management growth. And if this were to be done, I think it's a really, really big move for Bitcoin. I mean, obviously, like I said, speculation, but I threw about 3,000 into Bitcoin on that day. So, I mean, just let it sit there. If Elon were to buy in, I can see this go, 90K, right? Sorry, yeah, 90K, yeah. So, I mean, kind of triple, right? Obviously, that'll take time, but yeah, I mean, Elon buying in, right, with converting Tesla's assets, it's a really significant move. So yeah, I mean, still speculation, but I mean, if there's downside, I just hold for years, kind of just put whatever assets that you're willing to kind of let sit for years. Bitcoin, we still are long on Bitcoin, both DJ and I. We see a lot of upside. So as a long-term investment, Bitcoin, even at these levels, is still pretty good. And just for fun, going in covering GME, yeah, I mean, we closed at 325, so pretty insane. It's just really you can't really predict it. We could go, crazy. We could drop crazy. It really depends on these brokers and kind of the macro events that occur with respects to some of these meme stocks. So we'll be watching that. I think, like DJ said, this will kind of really dictate the markets, and more so, confidence and certainty in the markets. With the way that these meme stocks are moving, there's just complete uncertainty in the market. So that's what's kind of causing this volatility, and a lot of panic selling as well. So there is that. And then another thing I wanted to cover is I looked further into this predicament with these brokers like Robinhood, and it looks like actually a liquidity issue. So I looked further into it, and then another thing is that the clearinghouse for both Robinhood and a couple of other brokers, and then another clearinghouse came out and they raised their capital requirements. So what this means is that the brokers have to put up more capital to the clearinghouse at the end of every day, right? So with this being said, right, Robinhood CEO, he went on that interview, and with CNBC he indicated that he kind of explained a what sounds like a liquidity issue, right? But then he indicated that it's not a liquidity issue when he was asked about it, right? But then on CNN, he indicated that it kind of is a liquidity issue again. But then he indicated that he denied it, right? And then I didn't post the link to Interactive Brokers CEO, but the IBK CEO, he went on, I think he went on Bloomberg. Yeah, I believe it was Bloomberg. He went on Bloomberg and he did an interview there, and the IBK CEO, he was getting quite a bit of pushback, but I actually liked his interview because he was really honest. So he was saying that he came straight out as well, and he said that he had IBK has 5 billion there, that they're able to put up to clearinghouses. So they're well protected, he said, right? So he really threw out a number, and then he said that he indicated that um, he the reason that he was putting on the restrictions was for fear of other brokers not having enough capital to put up to clearinghouses. So when that occurs, it's like a big thing because Robinhood would essentially owe IBK money, right? And it doesn't balance out. So IBK would be on the line for whatever excess funds are not present. So yeah, so I looked into that further, and then you see that Robinhood, they make a lot of money, but you don't know how much reserve cash that they actually have to put up. IBK actually came out with a number, and then these guys didn't. So it's a pretty troubling situation. I think that the reason that they actually put these restrictions at the time that they did, I mean, it could be, where, there's conspiracy of some collusion between Citadel and Robinhood, that ownership and whatnot. But I mean, what he was explaining actually makes sense in the grand scheme when you actually listen to the IBK CEO interview. So with that being said, if he doesn't have the amount of cash to put up, it's quite a significant thing because that means that Robinhood could really, go into bankruptcy at that point, right? And then another thing is that the day before they tapped into, I think, a couple hundred million into their into credit. So they took credit of a large cash position. So clearly, it looks like a liquidity issue that they have. And then if this trading continues to occur, they won't be able to put up their funds, right? They won't have enough, right? And then you have the situation where there's this investor pushback against these restrictions, obviously rightfully so, right? But then Robinhood's faced with a kind of debacle of, do we put the restrictions on and protect our potential, not having enough cash position to put up to clearinghouses, or do we protect ourselves and really lose the entire customer base, right, and continue to get pushback? So it's really a tough situation, but I think that it's fairly significant because if Robinhood goes down under, the markets are completely screwed, right? So we'll be dropping, faster than anything. We'll be hitting circuit breakers. Markets over, right? So I think it's really unlikely. I mean, I don't think that. I mean, there's quants in the back that are doing the math on a minute-to-minute basis, ensuring that they have enough cash and whatnot, which is why they're implementing these restrictions. But if Robinhood were to go bankrupt, it would just crush the entire market. So I mean, it's a situation that's there. It's kind of unlikely, but yeah. But also, I think a lot of you guys have put accounts in Robinhood. So I mean, I think this would be time to kind of move some cash out of Robinhood and open a new brokerage account. Not only because of that, it also is pretty good for you guys because there's some restrictions that Robinhood has that other brokers do not have. I know that a lot of members, when I'm alerting warrants, for example, they can't buy warrants on Robinhood. That's one big thing, which is a lot of opportunity cost loss. And then there's a couple of other things I can't really name. I'm just off the top of my head, but you guys can give me some insight onto the other restrictions that Robinhood has that other brokers don't. So yeah, I mean, also I think that this is a good time to do that too, because right now, if you're following our recommendations, we have quite a significant cash position right now. Both DJ and I are yeah, have quite a significant cash position. So I mean, let's say you have a 50K portfolio, you have 40K cash right now. I mean, it's not a bad idea to take 20K, open an account, and do a cash transfer over, or withdraw and deposit, vice versa, right? So yeah, I mean, I would recommend that, to be honest, because the way that I'll post a link to the IBK interview, but the way that he's explaining it really honestly, indicating his exact position that he has in IBK, and indicating that he's not afraid of his own liquidity issue, but he's afraid of other brokers, which obviously I think he's referring to Robinhood. It's pretty daunting, and I think it's a legitimate cause for concern. So, I mean, that's a possibility that is there. So, I wanted to kind of touch on that. Another thing is that, yeah, like DJ said, I indicated we could see a potential regulatory action, obviously, because there's AOC and all the Democrats, and then a lot of Republicans as well that are really do not like what's going on and what's occurring in the markets currently. So I mean, with Democrats in full control, I posted on the Trade Alerts commentary a bit of a kind of prediction there, but I think we could see some sort of regulations that would essentially stunt growth in the markets. So it would be taken as very bearish by the overall markets, and then we could see some sort of push for a correction at that point, acting as a push to the catalyst. There. So I mean, it's also a possibility, but with all this being said, the main takeaway is that there's so much uncertainty, a lot of potential catalyst for some downtrend to see, and potential real, like, significant correction that we could see potentially. So yeah, I mean, playing it safe, cash position, very specific in our entries, and mainly going on the holding these longer term SPY puts, which proved to be extremely well performance throughout the entire week. We look to continue that next week. One thing I wanted to cover as well, with regards to that, I see Joe's asked, what happens if a platform like Robinhood goes bankrupt with people's money? So I'm not sure what it is in the US, but maybe someone can advise me. But like in Canada here, we have what's called the CDIC and CIPF. So CDIC is more for banking institutions. CIPF is for IROC regulated brokers. IROC is like SEC for Canada, essentially. So what CIPF is, it's a independent governmental organization. I think they cover a million, up to a million per institution, per member institution. So um, so essentially, if let's say TD Bank's brokerage leg were to go bankrupt, I would be covered for up to a million. Right, if I have 2 million inside, I would be reimbursed a million from them. If you have 500k, you'd be reimbursed that full 500k. But obviously I don't know the process for it. It's never really been done, and at the same time, it's not really supposed to happen, right? I mean, these kind of things aren't supposed to happen. These are more so there to kind of instill confidence into brokerages, and have regulations present. So I think you guys probably have something similar in the US. But I mean, maybe someone can enlighten me on what it is. But yeah, we have the same thing, CDIC, which is Canadian Insurance Deposit Corporation. So it insures up to 100k, I believe, in each bank. So if same thing, if I have 100k in TD Bank, for example, a checking account, savings account, I'll be insured for that 100k if TD were to go bankrupt. So it's more with CIPF. So I mean, maybe someone in the US who is aware can indicate if what organization you guys have in the US to protect you under that. I assume you must have something, but yeah, there is that. But I mean, I don't know how the process is, but I assume it's like a lengthy process, right? I mean, this is something that doesn't really occur, but I think you guys should have something like that, especially, I mean, as you know, in 2008, Lehman Brothers went bankrupt, right? I think they must have implemented some sort of protection there. Um, yeah, it looks like Austin indicated the CIPC protects up to 500k in accounts. It takes months to unwind and get your money back. Yeah, so same thing. Yeah, same thing that they have here there. Same thing as the CIPF. So yeah, there's that. But yeah, I mean, it's not something you want to go towards, right? Obviously, nobody wants to go through that process. So yeah. But yeah, other than that, we'll just be continuing to monitor the markets together, both TJ and I, and implementing our thoughts, following closely to what's occurring with this Wall Street and GME action, and then kind of going from there. DJ, if you want to move on to some of the questions.
Yeah, sure. We can move on to some of the questions. Just let me. I'm just gonna give my take on this whole current
Yeah, sure.
market situation at the moment, and what I actually think about it. So, I mean, Ramsey covered overall very well of the whole situation, I think. Personally, I really do not like this current market situation. And I'm speaking from somebody that has probably increased my portfolio by 30-50% in the last month or so. But this is not a market situation I want, and I do not actually care about really making too much money in this current situation. I think there are many people in the world that are severely underestimating the long-term effects and aftermath of this entire situation. I think the internet is and many people are obsessed with making short-term money, and they're not really thinking about the bigger picture and what all of this impact can really do to the market themselves. I mean, I wasn't in 2008, but it's sort of that situation when when stock market is just tanking and collapsing, and at first everybody is happy that they get to buy a lot of stocks at discount, or a lot of the shorts are really happy. And then next thing you know, you look left and right. This is bankrupt. This broker is down, and then everything is gone. And then people are gone, brokers are gone, your money is lost anyways. Even all the money you made, you can't even get it because the brokers can't afford to pay you. And you pretty much, I feel like at the end of it, it's like the whole money doesn't matter if it doesn't get paid out and you can't keep it properly. The main problem I have with this, it is simply not sustainable. Um, it's just at the gist of it, what's going on is retail through a social media platform, namely Wall Street Bets, has the ability to target heavily shorted stocks on Wall Street at the moment. And because these stocks are heavily shorted, as long as there is enough buying, the to keep the price up and higher, the shorts will have to cover their shorts by buying on market price in order to cover their own liquidity. When that happens, it pushes and propels the price higher, which propels other shorts to face the same situation. And at the same time, there's just a lot of more people buying and holding. So the buying pressure is much higher than the selling pressure. So the price basically goes up higher and higher and higher, and causes this vicious cycle of a short squeeze to basically insane highs with no real top or ceiling that can be estimated. This sort of thing happens pretty often, I would say. Pretty often to a small degree in the junior cap market or penny stock market, but it's never really happened in such a the overall market and large market cap companies. And I believe I read something now that GameStop is worth more than 50% of the companies in the S&P 500 now, which really reminds me of what happened in Tilray in 2017 when the same situation happened. But Tilray ended up collapsing. But this situation is very different because Tail rate was a short squeeze, but there were nowhere as many as retail investors, or nowhere as close as people all doing the same thing. And stocks and a stock market is sort of a self-fulfilling prophecy, whereas if everyone buys, it continues higher. And the higher it goes, it sort of incentivizes more people to believe that the strategy is working, so they'll continue to do so. Wall Street Bets right now, I believe, has more than 6.4 million subs. I think just last week they were under 2 million subs, so it just grown by 4 million people. And I think that is actually going to continue to grow. So we'll might even see more than 10 million members by Monday. And that's even more cause for concern, in my opinion, because with the more amount of people you have and the more amount of people that buy into this strategy, the harder it is to sort of control and relegate. And it starts with only a stock or two. Like you start with GameStop, but now you can sort of see from GameStop, it's branched on to other companies like AMC, for example, BlackBerry, Nokia, etc. But the thing is, it doesn't really end there. And that's really the problem, because if it really doesn't end there and it continues to spread to other companies, like say you just go into Apple instead, you could just turn Apple into a 500 stock the next day in theory, and then it will just have a huge market influence on the index. And right now, retail is celebrating and retail is happy, and I'm happy for the people that are making money, that need the money from this situation. But ultimately, I feel like if this goes on for too long, as in if this goes on even for another 2 weeks, it can cause something like catastrophic that will destroy like the entire market system, and we might even go into like a prolonged overall market halt, and cash frozen, that type of situation. I know right now what's trending right now is a silver short squeeze on Wall Street Bets. And I've heard about that for a couple days, and we've been seeing some momentum on silver and SLV these days. Whether or not that'll work, I don't know. It looks like it's sort of working because SLV is, up 10% in the last couple days, and some calls have ran significantly. The problem, like people are saying, like a $25 to $1,000 short squeeze on SLV. I mean, that sounds great, and it sounds like you'll make a lot of money. But metals like gold and silver are meant to hedge inflation and actual cash. So I mean, if I'm seeing silver at $1,000 in a week, and gold at like 5 or 10,000, like I don't know what's going to happen to the American dollar or any other currency, and that sort of momentum would really bankrupt a lot of the banks and brokerages, which ultimately is where you like store your money into anyways. So if they go under, then there's no real way to actual like keep or store your capital as well. So I think that if this continues too long, we're heading into like a very, very bad situation where people are basically going to reap what they sowed, to be honest. The thing is, I do believe we won't reach that level because of regulatory actions, like Ramg sort of mentioned it. I think if this continues, even for the SEC will honestly come in and just halt the market overall. And at that point, a lot of things would be frozen. I would be looking to withdraw some capital from my accounts, to be honest, and store into the banks, because I'm not even sure about my own brokers, what their margin requirements and cash positions are. So I'd rather not get frozen upon. I think that, I mean, if we can imagine that we can just do what we did on GameStop on any other security, but that's buying calls. That's buying calls, and calls might sort of quote unquote screw hedge funds and give retail the money. But if there's somebody out there that suggests something like, oh, let's just Apple puts are cheap, or SPY puts are cheap, let's just blast like $20 SPY puts, and then when they go to 20, we'll all be billionaires. Like, and then if everybody follows that idea, what actually happens when SPY goes to 20? I mean, I'm pretty sure every institution is not going to be prepared for that situation. And like, by the time that happens, your puts might be worth a lot, but it's just a fake currency that you can't even convert in itself. So it's not great. Personally, I think the reason we're selling off in the market is because of this. I think there's quite a lot of big money and smart money that are just trying to be smart and not lose all their capital or not lose all their gains, and just basically selling their other stocks, withdrawing some capital, keeping it safe, because this sort of situation might really happen, because what we're seeing right now is like unprecedented. Like, we've never seen this ever in the history of the stock market. So anything that happens from now on is also going to be unprecedented. So, I mean, people are going to say we've never seen a prolonged stock market halt, where we've never seen brokerages freezing funds left and right and everybody getting evaporated. But I mean, we've also never seen what happened to GameStop either. So, but whatever happens from here, literally anything can happen, I think. So I would be personally on the safe side. I mean, I built up a significant amount of capital, and I'm not ready to lose it all because of 6 or 10 million people who just want to basically play hot potato with the stock market. I think that in itself screws the whole integrity of the stock market as well. And I'm saying this from a technical analysis and chart perspective. Like, I'm somebody who really doesn't care too much about market fundamentals, and I value TA and charts above fundamentals at all times. And I'm worried for the actual concept of the stock market itself, because like, I'm well aware Wall Street and firms' market caps and valuations are based on, you know, those price earnings ratios, the models, quote unquote growth, like that sort of theoretical valuations and so. And I might not believe or care too much about that myself, but it is those numbers that sort of keep the overall market in place. And it's because of those numbers that we see the majority of stocks trading at where they are. And we can quote unquote justify and rationalize it as a world and agree together. But I mean, if none of that matters and nobody cares about any ratios at all, and everybody only cares about the next ticker being posted online social media, then I mean, you might as well see Apple at $1, you know, GME at 10,000, penny stocks at $10 billion. I mean, there's no sense of value. There's no sense of integrity. There's no sense of concept. The whole market loses its sort of reason for existence. So that, in my opinion, I mean, it would not incentivize me as an investor to ever stay in a market, because I mean, like, the market is sort of there for people to passively retire over time. Pension funds, index funds, etc., contributions. It's a nice way for people to passively make income and grow their savings over time. But if you remove that entire concept, and anything can be worth anything, and it's so risky that you could be holding a quote unquote good company, but it just collapses out of nowhere. All that money is gone. It just turns into a literally like a hot potato situation where if you buy faster than somebody else buys, you're most likely to make money as long as nobody sells the top. And then that is a market for basically gamblers. And I mean, the stock market is a casino, but it's not supposed to be one to this degree. So that's just my rant over the situation. So from here, I guess Ramji, if you want, we can go back and cover some questions.
Yeah, also I'll touch on that. So I think what DJ said is like an extreme case, right? So what I'm predicting, right, is that we'll see a lot of downside, right? So that's why it's good, we're entering our long puts. All positions that we are holding currently will do well. We're very confident. I've really been keeping a close keen eye on the market and these macro factors. Also, I posted the IBK interview I was referring to in the live session questions channel. So take a look at that. You'll know what I'm referring to. Um, but yeah. So what I'm predicting is that we enter that downtrend. Possibly we see, like I said, I was saying in the general chat, where I'm looking for circuit breakers. Obviously I don't expect it happening right now. It's a little bit of a joke, but in the next 2 weeks, honestly, I wouldn't be surprised. If we get some sort of some downside and then panic selling on top of that, we could really enter that circuit breaker and then hit that correction. So we're very well poised for that. We have a large cash position, small amount of equity in long plays, but select certain long plays that we're bullish on. And then when we have that correction, we have our May SPY puts. We sold out of March, but Mays are much better in my opinion. Significant upside, very little downside, as I indicated before. So yeah, I mean we'll be well prepared to ride that down, and it will be very profitable. I don't think we'll have some sort of complete collapse. What will occur is we'll have a correction similar to March, but it will be a worse correction. So I see Jules asked with the spike correction, how happens soon? How low can we go? 320. I think we could see maybe 300. Maybe even some lower than that. We could even go maybe 280, 275, something like that. So what will occur is that when you have a correction, right? So in March, for example, you had a lot of bears, right? A lot of bears are needed for us to bounce up in a V shape. Obviously, majority of it was the Fed monetary policy stimulus, etc., that was injected, which flipped that bullish and was able to provide that V-shaped recovery. But I think this time there'll be less bears because people are expecting a quick, March was maybe 2 weeks downside, quick, circuit breaker. I think 2 days, I think, in a row, and then we hit the bottom, and then V-shaped recovery. I think this time it'll be a little bit longer, so maybe a month, maybe 2 months, something like that. I think it'll still be quick. We still have a lot of retail, but yeah, there'll be less bears, I think. So when people are trying to buy in to go long, the floor will collapse, so it'll continue a little bit downwards, and then we'll finally hit a bottom and recover up. My prediction is when we hit that bottom and we hit that floor and recover up is when essentially regulators come in and they implement these regulations, policies, etc., to stimulate the market and cause some sort of order in the markets, general order, and more safe investing. Restore integrity in the markets. So there is that. But like I said, the RobinHood scenario that I indicated, it could occur, and if it does, that will be a pretty significant historic thing, just like Lehman Brothers in 2008. Pretty significant thing. So there is that to think about. So hope people take that into account. But so I think it's overall fine. I'm surprised that more people aren't seeing this. We still have quite a few bulls. I identified it right away, right on Monday, and we've been playing it down, profiting quite significantly, all of us at NTG. I think, like I said, we see that continued downtrend. If we do flip up for whatever reason, I don't think we can continue much longer at the pace we're going. I indicated last week's live session, like I said, we have an upside, let's say, on a long play, upside of maybe, 10%, right? So I don't see, SPY going 420, for example, right? It's a little bit too high, right? But the downside is quite significant, right? So, I mean, I'm thinking like, people in the markets right now, if you're entering, long, you have such little upside, but you have such significant downside risk, right? So it's just not really worth it, which is why I indicated, we're only entering select positions where we see good risk reward ratio. So we have to see significant upside for the amount of risk we're taking on to the downside for us to enter. So obviously that's why we haven't been we've been very selective on what we're entering, and it's proven to be an effective strategy. We are 95% success rate on all our calls, down or up, right? So I think we'll be fine, guys. It's a little bit, maybe it's a little like scary situation that the way we're explaining it, but as long as you're prepared and you're entering our plays accordingly and taking our advice, we all should be good. Like I said, we're entering, even with SPY puts, we're entering the safest one. So I'm going May. May is extremely safe. I've already looked at it where it's like, so when we were reaching, I indicated before, but when we were reaching all-time highs on SPY, these May puts were only down 10%, right? I think if we there's a bit of a ceiling on SPY that we can really reach, right? So when we touch that ceiling, the most you could be down, and that's temporarily down. Keep in mind, right? Because May is 6 months away, right? So you're only temporarily down maybe 15%, 20% max, right? But the upside is just crazy significant. If we start hitting circuit breakers in 2 weeks, these are going 5x, 10x, etc. Right? So these will go crazy. IV will jump insanely. They're 6 months out, right? And they're 350 strikes. So, I mean, if these are going in the money, right? These are going crazy returns, right? So, it should be good, guys. I don't think a halt in the entire market is ever possible. I don't think we'll get something like that where regulators don't step in and Fed doesn't implement some sort of monetary strategy and policies to kind of undercut what's occurring. But I mean, I'm pretty surprised. You look at the overall sentiment on online, Twitter, wherever you want to look. These forums. There's not a lot of people thinking like us, but I mean, clearly, we've been on the right side of the markets for the past months, right? Looking at predicting upside, downside, and macro events all to the T. So I think we're fairly confident and we'll continue doing so. So Yeah, it looks good, guys. We'll be on the right side, whether we see downtrend, uptrend, and downtrend will actually be able to profit really significantly. So yeah, I mean, like I said, it's these corrections that make millionaires. So yeah, when that occurs, we'll be able to profit quite significantly, guys. So yeah, just wanted to put my word in there and my thoughts on that as well.
Yeah, yeah. What I gave is not the realistic example or anything I think will happen immediately. What I gave is pretty much the absolute worst case scenario that I would say is maybe 0.5 to maybe 1%, one in 100, or even less than 1 in 100 of happening if everything that continues to go bad and stays bad for like a month plus. That with no regulatory actions, nothing being taken, everything going ballistic, then I think that scenario could very well happen. But what I gave is just to give perspective into what many people don't really realize what their actions are going to turn the entire market into, I think. And like not like all over the internet, traders I know professionally, traders I've been with for a long time, social media and everything, there's too many people bullish right now, and everybody is just messaging and talking about what's the next squeeze, let's do this, let's do that. And when I see all of that, it just it actually scares me when everybody is so bullish. Because in March, when we were falling down, I remember messaging everybody I knew, even the professional traders I knew, that, oh, this is the bottom. Like I'm buying in, I'm scaling in, let's get it. And then all of them said, they're like, DJ, I really trust you. You're a really smart guy, but I think you really got this wrong. We're going to 150 on SPY, and it's time to sell everything. And then when they told me that, I actually felt really good, because I was like, okay, if everybody thinks we're going to shit, then, and I'm the only one who thinks we're going up, then we're probably going up. And now at this point in time, there's so many traders I know that have good discipline, good patience, good focus. And even those people are starting to lose it, starting to FOMO, starting to buy. So I can't think from a sentiment perspective, like any other sentiment scenario that's telling me top is coming and something bad is going to happen from here, because everybody is just way too excited and way too hyped about this money train, but I don't think it's going to last too long. So that's just my overall perspective on the thing. Yeah, but we'll go into questions now. We'll go into questions, and maybe we'll touch upon the topic again if some of the questions ask for it. So let me just scroll up here.
Yeah, also, guys, like you said, like in March, for example, right, you had people just going crazy, right? People not really March, February, you had people like saying, we're headed to the moon, right? And then also a lot of these events, they take some time to actually have an effect. So I remember in February when I was predicting a March correction, right? Um, a lot of macro reasons, right? Clearly, 2019 was an insane year. SPY up 30%, right? It's just not sustainable, right? People were sort of blinded, right? And then I remember it's funny. I remember seeing videos like people saying, "Oh, this coronavirus isn't going to affect." Even when it was in the U.S., when it was in Canada, when it was in the UK, Australia, etc. Right? Um, meaning the coronavirus was present there, right, and growing. I remember seeing videos online, these traders online and whatnot, saying, coronavirus has no correlation with the markets, and their reason being is that they'll pull up a chart of coronavirus cases increasing in the US and then compare it to SPY, right? And saying we haven't hit a crash, so it's not going to come, right? But lo and behold, maybe a week or two after, March starts hitting circuit breakers, right? So I mean, like I said, you need a lot of bulls to be able to hit that correction mark point. Currently, even though we're headed, we hit like the worst week on SPY, there's still a lot of bulls, so we could see a correction. Whether it comes this week, whether it comes next week, 2 weeks, etc., it's fine. We have those long-term plays, which is why we're not going short-term. I'm sure anyone who's following us for a while, we're very big on risk reward. So even downside, upside, whichever direction, we're following a certain amount of risk reward ratio and playing it safe, but also garnering significant profit and upside on all our plays that we're doing. So yeah, I mean, similar to March, we're seeing that same thing. 2018, same thing. I saw the same thing. It panned out correctly. March panned out correctly, and I think this is going to be the next one right here. So yeah, I mean, we're ready for it, guys. We've been predicting these macro events, corrections, upsides, tops, bottoms correctly over the past few years. So we're trying to do that again this time around, and there'll be a lot of profits that can be made, guys. So yeah, we're gonna be playing that quite significantly, guys. And yeah, so we'll go on to questions. Let's see here. Back to back asked, hey Ramji, DJ, great calls this week. What's your outlook on the markets moving in the future? Any thoughts on the current volatility? Yeah, so I'll skip that one because we kind of just covered that, throughout the past hour. So yeah, thoughts on a silver squeeze and it being the next short squeeze? I think silver squeeze is pretty ridiculous in my opinion, but I mean, I don't know. I guess we'll be watching, but yeah, in my opinion, silver squeeze is a little bit different than an individual company like GameStop. It's a commodity, right? So it's a little bit difficult. I think it's pretty ridiculous in my opinion. But DJ, if you want to touch on that.
Yeah, I also touched on the silver squeeze earlier and just how dangerous it could be if we see metals flying 10,000% a day because they're the traditional hedge to cash, right? So, I mean, if gold is $100,000, silver is $50,000, and maybe the US dollar is worth as much as like Zimbabwe dollars. So I don't know what that would do to the markets or people, but it could happen. So as SLV is trending up, I'm seeing a lot more hashtag silver squeeze on Twitter and social media. So I mean, we're in silver leaps, so that's that. But no real idea if it really happens or not. Just have to see. I don't think we really know what will happen. I expect we both expect regulators to step in, but we don't know when they'll step in, and we don't know how they'll step in. So we'll just have to see, and then just wait and see what happens, and then go from there.
Yeah, I don't know. I kind of disagree with that, to be honest. I think that I don't think we can get a real silver squeeze like that goes crazy. I just don't think it's possible there. But I don't know. I guess I don't know. We'll have to see. But I don't think that's really like a possible situation. But
Exaggerate a little bit, but I think silver squeeze, if it happens, I think silver can see 50 to 100. But I don't think
I
it'll
can see
hit
that. Yeah.
1,000 to 10,000. That was just like an exaggeration.
Okay. I could see hitting levels like where we saw in like 2008. So those like all-time highs, right? But yeah, I mean, even that, it will be good for us. We're playing those silver leaps and whatnot, but even that same thing, regulators will step in. A commodity isn't something that you can move like even with the calls, like how they're moving GameStop. So possibility of that is very limited. If we get a silver squeeze, quote unquote squeeze, it will be just a little bit, like something fairly small. So yeah, that's my opinion there. um Dre Trades asked if meme stocks keep mooning and brokers can't clear margin requirements, what happens to overall markets? Yeah, so I touched on that. So I don't think that any of the brokers are really in trouble. I think it's just Robinhood, because I'm watching all these other interviews with these CEOs like IBK and whatnot, and Tasty CEO did an interview as well. These guys don't have any concerns about liquidity issues, but Robinhood CEO, he's really indicating, the way he's explaining it, he's indicating that he has a liquidity issue, right? So what these other brokers are doing is they're implementing restrictions to protect themselves. So in caution over Robinhood defaulting essentially, but Robinhood is implementing it to actually protect themselves, right? So, what happens to overall markets? If they can't do that, I think overall market will just crash. So we'll have a correction like we predicted. But what I think will occur is that Robinhood will just keep implementing restrictions, because I don't think they can just kind of commit suicide, quote unquote, as a company, where they just say, let's just allow them to trade, and we go down under, right? They're going to end up protecting themselves first, and then implementing whatever restrictions they need to ensure they have enough capital and go into credit lines, etc. So yeah, that's why I mentioned that Robinhood issue. But yeah, I mean, that's what I think we'll see there. And then, I mean, I don't see Robinhood really going bankrupt. Someone will either buy them out, or they'll get like a 2008 bailout. No matter how many people don't want to see Robinhood getting bailed out, they'll end up getting bailed out for sure. DJ, you could touch on that as well if you want.
Yeah, I agree with that. I agree with that. So, yeah, pretty much agreed. I'm pretty sure the CEO. I mean, I also saw that interview when he said there was no liquidity problem, but there's definitely a liquidity problem. So that's all I'm gonna say.
Yeah, exactly. Moving on to the next question. Dre Trades also asked, could this be a black swan event that causes a crash? I hope retail locks in gains in meme stocks and sinks into the market. Yeah, exactly. So that's what I was indicating and leaning towards. I mentioned it last, 3, 4, actually, 2, 3 live sessions. We're going to hit some sort of catalyst that will push us into the market correction. At that time, I wasn't sure what it is, so I indicated there's some scenarios, possible scenarios, but I'm really unsure what it's going to be. There's nothing that really sounds reasonable. So I said, it could be a Biden tax reform that surprises, or some sort of strain of coronavirus that enters that is kind of unprecedented. But now we finally hit something that's actually really reasonable, because those things were a little bit unlikely. And this one, I'm fairly confident that this is the catalyst that pushes us into that market correction. So, SK asked thoughts on PayPal calls and SPY puts. Sold puts end of the day on Friday, looking for a bounce on Monday for re-entry. Yeah, so I'll touch on the SPY puts. Yeah, so for me, I'm holding that base position like I mentioned in May puts. Base position being that you just hold it long, right? And then a portion of it flip it on the highs and lows as we're predicting. March calls were a short-term play, which is why we sold out all of those. I'm predicting a bounce on Monday as well, which I indicated. So when that occurs, you can kind of reload those SPY puts. DJ, you can cover PayPal and space.
Yeah, sure. So PayPal earnings, I think next week. They've recently added crypto trading, right? So I'm pretty bullish because I'm thinking we'll see a significant increase in their crypto transactions regarding their earnings. It might not be making too much at the moment, but I think the growth will be pretty big. So pretty bullish on those. But the overall market can definitely drag these down. They're April 300 calls, so they shouldn't get hit too hard like weeklies. So if the overall market goes too bad, may have to just cut it at a loss. But I didn't put too much into them at the moment because still looking for a direction, as I've noted. If the market sort of bounces and recovers short term, then I think these will do fairly well. SPY puts, Ramsey covered it. Space, I think it's a very good long company. And if you want to be safe in the short term and secure some capital, then I would say probably sell half your shares. And if you want to be really safe, then maybe sell the whole thing. But I think he'll do fairly fine long. Just to put a little bit more in perspective, I don't think we will get, whatever I said earlier, that type of reaction and event. I don't think this will be worse than 2008 at all, to be honest. I think the realistic scenario is we just consolidate, maybe hit, something around 330 to 350 on SPY, but just to add perspective, even in 2008 when SPY dumped 50%, I mean, now if you just sat and held through SPY and some good stocks, then I mean you're up probably 3x on SPY and probably 5, 20, 50x on everything else. So it's not like everything gets wiped. It's just that you're temporarily down, and if you're not in a very high cash position, or for some reason you need the cash at hand, like if you need to pay bills or something where you need cash at hand, then it's important to sort of withdraw and have money prepared for that. But if you're okay day to day, week to week, and you don't really need excess money and you have in the market, then the longer term plays that we recommend to hold long, we still think are fine, and we would be allocating cash into those plays on major market corrections instead. But I'm really looking long for those specific equity plays, like multiple years on those plays. So, but if you're in the other situation where you need short-term cash, liquidity, etc., then feel free to take profits and sell out more in the short term because it might be necessary.
Yeah, exactly. Yeah, but we'll be predicting these like kind of to a T. We're fairly confident overall. And I don't think we'll see a long-term bear market ever in our lifetime. The reason being is that the demographics of the market in 2008 were completely different than they are now, right? You didn't have access to trading. I can trade if I'm in the washroom on my phone, right? If I really wanted to, right? in 2008, you had no real technology of trading, right? And it was difficult to access the market. And then also you didn't have so many young people in the market as well, and people with cash willing to throw into the market. So it's a completely different demographic. The dip gets bought, right? But in 2008, the dip wasn't being bought because the demographics of the market changed. So um, I think that we'll never really see an actual prolonged bear market, meaning like a bear market like 2008, where you see like a bear market for a year. That's, in my opinion, never ever possible. Again, as because of the fact that we've shifted demographics in the market today as opposed to 10 years ago. So yeah, and then moving to the next question, Jules asked at Ramg, what do you think about UVXY shares and why VIX shares instead of calls? Yeah, on that end, it's more of a risk reward scenario. Calls, their IV has spiked now, right? We've had a first spike in VIX in like 3 months, right? So I wouldn't want to enter the calls now because it's more of a longer play like May SPY puts. So I would want to enter the shares because there's less volatility and we can hold those long and there'll still be significant upside. Sorry, yeah. On a market correction, we're going to see VIX jump up to that, $100 level like we saw in March. So I mean, upside is significant on these VIX shares, and we can just hold them through. Downside is pretty limited as well. I mean, I don't see it going past under that levels it was a week ago, as we were in all-time highs in the markets. So yeah, I mean, the reason I entered calls this past week is because I was fairly confident, and that's why I entered the weekly calls as well, because the upside was really great. And I mean, you saw it. We got like an 8x on those VIX calls weeklies, and then they actually ran to a high of 11x. But I mean, we sold a little early. That's fine. We want to be safe. But yeah, risk reward standpoint, I recommend this VIX shares rather than the VIX calls. Much less downside, quite significant upside. It can go 10x, right? So yeah. Austin asked, you both did a good job of covering this already, but any additional comments appreciated? How do you expect the whole saga, Wall Street Bets, GME, and other meme stocks, brokers allowing certain transactions, situations to affect markets going forward long term? Do you guys expect new litigation and limiting parameters on retail, institutional side? And do you think one side will be more affected than the other? Yeah, so we covered that briefly. Maybe the last part we didn't cover as much, but I think this will end up not being good for retail because so like these Wall Street Bets guys, because in the end, the institutional side, like I said, they'll put their foot down. They won't want to. They won't take it anymore, and they'll end up, winning on the upside because I mean, with institutions they have more access to information than these Wall Street Bets guys. As much as they're controlling the markets currently. Once we get some sort of regulations in, it will kind of disappear. So that's my thoughts on that. DJ, you can briefly touch on that as well.
Yeah, I think regulators will step in and Wall Street will probably likely start to take back some of the losses and start taking the gains back from retail. Regardless, I mean, just the option pricing on some of these meme stocks are absolutely crazy. Like the IV on those are insane. So, I mean, even if the stock goes up like 10% a day, your call could be going down like 50%. So, I think ultimately Wall Street might somehow regulate, and then the options sort of just collapse. And then once the options IV get killed and people start maybe losing money from their calls on the meme stocks, it might give them less incentive to sort of just keep on buying the calls and gamma squeezing, and maybe it fixes itself through that route. I think this is one of the more likely scenarios that may occur, and it wouldn't really damage anything in the markets overall. So this could be one possibility, I would say. And to add on Ramsey's point about never seeing a prolonged bear market ever again, I agree with that sentiment. But just to clarify, what the part I agree is that we'll never see a prolonged bear market, but I do think there will be bear markets. Say in the past, it takes 1 or 2 years to drop 40% on SPY, for example. Now I just think it'll just drop 30-40% in 2 months. I think the speed of the bear market will just get accelerated now that we have more liquidity, more buyers and more people with money in the younger generation. There'll be more sort of FOMO and panic selling both ways. So I just think it'll be sharper moves, and I think that the volatility will stay in the markets. Not this kind of GameStop volatility, but we're not going to be seeing like 1 to 5% moves on SPY annually anymore. Where we'll probably be seeing 5, 10, 15 annually now. Much increased volatility overall in the markets going forward.
Yeah, I agree. Yeah, the time range, yeah, very accurate as well. DJ and I both have a similar thought on that. I think just like he said, in 2008, you see 2-year bear trend. That equivalent into 2021 standards is about 2 months. So, you see SPY just tanking over 2 months, and then we get a hit a bottom and we see recovery. So I see, yeah, something similar to that effect occurring. Joel's asked, just what happens to a platform like Robinhood if people go bankrupt. I'll touch on that again, but yeah, it's CIPF, Canadian Investor Protection Fund, and US, Austin indicated you guys have a similar organization, SIPC. So, investors are protected there. It looks like 500K in those accounts. To my knowledge, the CIPF covers 1 million. So, I guess different amounts, but similar goals and reasons for those organizations being present to protect investors. Moving to the next question. Albert Pacino asks, so why is it worth holding this equity we have like SPACs and BFT if downside is so likely? It's more so like these are more longer plays. We could see a little bit of upside before that. So when we really hit that trigger downside, we just liquidate all equity and cash, all equity positions, so all long plays. So that's where we have these positions and long still, but we have such a small amount. So like I said last week, I cut 75 to 90% of most long positions, and then somewhere I see a little bit of upside, I've kept about a quarter position. So that's the reasoning there. And also, kind of coupled with that question, Danny G asks, would you suggest selling things like Tesla and Apple and buy back when we hit that low? Yes, I would. So, like I said, all my long plays, I've liquidated, large portion of them, and when we hit that low, I'll definitely be able to buy back. And this is a great strategy because I said it last week or the week before, similar to CCIV, where there's could be upside, but at the worst case, where on a risk reward standpoint, you're looking at maybe X amount of upside, but the downside is extremely significant, right? So on a risk reward standpoint, it just doesn't make sense to continue long when if we really see a complete, market pattern reversal where we're clearly continuing upwards for, a prolonged amount of time, we just re-enter, right? It's not really a big deal. So, this situation, this strategy protects us on the from any downside, but we have much upside. So yeah, and DJ, you can touch on that as well.
Sure. Yeah. I also cut and liquidated a large position of the majority of my holdings, other than BFT and I think ZNT FPAC. I don't have huge positions other than really those three, but to be honest, ZNT and FPAC I think are very low right now, and I would be looking to scale out on a little bit of a bounce and rebound. BFT, I'm long and bullish. I have these in a long account, so it's a little bit of a different situation for me. I put in capital that I'm willing to lose. So I'm not sure. I don't think I'll be really cutting these fully. I might cut them by half if we really see the next leg down. But in my opinion, it's a solid stock and company, and when and if the merger goes through, they should likely be 2 to 3x higher, sort of regardless of market situation. Even I would say. I mean, it's like even if, for example, even if SPY, drops 10-20% in the next 3 months. Sorry, not I meant 2-3 weeks, and then say something like CCIV announces that they have a definitive agreement with Lucid Motors. I mean, sure, CCIV might drop to 16 or 15 to 16 just because of the overall market, but as soon as they get that news, I have no doubt it will at least open and run to $40-50, even in a very bad market condition, right? So it's sort of similar to that situation. I think, when the official merger date gets announced and happens for BFT, a similar price reaction will happen accordingly. But if that doesn't happen, it can definitely take a slide. And if the market pulls back, it will take a slide. But I do think that it will still go up regardless.
Yeah. Moving to the next question. Tim asks, how could this possibly be regulated? Yeah, it's hard to say. But they could implement some sort of buying rules, selling rules. Really hard to say. Some sort of restrictions on certain retail or institutions on the flip side. It's pretty difficult to say, but definitely it will be regulated some way. It's really up to the economists and the advisors of these congresswomen and congressmen to kind of implement and decide. But definitely, without a doubt, we'll see some sort of regulation. So it's the only way to really restore order and kind of protect the market from what obviously U.S. government doesn't want to see is a correction. So and let's see, moving to the next question. Tim again asks, can you post when to get back in SPY puts Monday? I sold for a bounce, or should I just add you on Monday? Yeah. I'll be posting. I'll be posting definitely. So, it's fine. I'll add you too if you'd like. So, yeah. Albert Pacino, I've heard mixed messages on IPOE hold versus shaving off some while it scales up. So yeah. IPOE is my play. I recommend shaving some. So currently we're holding a decent position. both IPOE and IPOD. IPOD, we have a much smaller position. We sold on the spike. We're still holding a little bit of a base, but if you look at the tracker on equities, you'll see how much I'm currently holding on IPOE. That I'm confident will perform well. So holding that. Let's see. Swag, another reason why you should get the yearly membership. These two have their own reasonable, different expectations at time of the market, and they don't argue. They provide their perspective and guide the group. Yeah, thanks, Swag. Much appreciated. Um, Albert Pacino, I'd assume any free service platform like Robinhood would be at most risk Webull. If you don't pay, you are the product. Yeah, correct. Yeah. So those are the brokers that obviously provide much more risk. Webull, I heard it's not too bad, so I'd have to look into it for you, but I think Webull's pretty good, to be honest. But Robinhood, I mean, clearly, there's some sort of problem over there, so that they're trying to protect themselves from. So, I mean, yeah, there's a lot of risk there. Jules asked, what are about the good SPACs like Chamath ones and PSTH cut down positions too? Honestly, we updated the NTG tracker on under the equities tab with our current holdings in these equities. So I would just follow that. That's literally exactly what we did in our own portfolios. We implemented and put that there. So yeah, I just follow those. With regards to Chamath SPACs, I'm holding some of the IPO. So I think right now it's just IPOE and IPOD. IPOD is a really small position. Our entries on both are really good, especially IPOD. We're in the low $10. So yeah, I mean it's nothing there. Yeah, these should do fine. Obviously, like I said, if we get a market correction on the first indication, we'll be able to identify that and exit right away. But yeah. Oh, DJ, you can cover PSTH if you'd like. Similar to that.
Yeah, PSTH. I learned a little bit of high risk calls for March. If you're talking about the shares, I think they would be good to hold. But if you have a big position, I would trim. I would just trim. All big positions, I would really just trim down, regardless of how good I think they are. And for small positions, I would hold. Medium positions, I would trim the ones that I don't like compared to other medium positions. Albert Pacino, if SLV runs like a meme, what would you expect from other metals like lithium, copper, nickel, rare earth, etc.? I think gold would gold and copper might likely follow suit. The other ones, I think they'll get a little bit of a delayed reaction. So if gold and silver run nonstop for a week, then maybe we'll see the other metals start taking off as well, sort of like a secondary pump. I don't really think the silver squeeze is going to happen at all, in my opinion. I'm just sitting on some silver leaves because I think silver is solid long term still, not because of this silver squeeze stuff. But it could happen, but I'm not going to completely rule it out. But I just don't think it's very likely. And I mean, Ramg also touched on it. It's a commodity. It's much different. When the correction happens, is it better to buy stock or options for recovery? What's the upside on UVXY on correction? I'll answer the first part and then let Ramg talk about UVXY. If correction happens, it's really depends on the speed of the correction. If it's very volatile, which I think it would be, I think the safest would be to enter shares first, because if it's dipping down very quick, premiums will still be very high, even if you're buying calls. Both calls and puts premiums will be very high. So you would have to kind of buy and flip them. Like you really can't buy and really hold in really volatile situations. So if we're looking to swing quality names into the future, then it's most likely would be scaling in shares first. And then once it sort of flattens out and finds a trend, that would be when we start entering back into calls and such. If you want to answer that as well, MG.
Yeah, so in my opinion, when we hit a correction and we hit what we'll identify when the time comes as a bottom, the play to go is entering majority shares and then a little bit of a small amount of capital into leaps. So the short-term options aren't really the way to go, unless it's like short-term plays, which we're extremely confident, which obviously we will enter. But for the long term on that bounce, where it's entering leaps, so leaps will be extremely bled out of their premiums, and yeah, that's the time to enter. And then once we start recovering, you'll see these leaps go up like crazy, right? So that's the way to go on a correction. And to answer the second question, what's the upside on UVXY on a correction? Upside is significant. We could see maybe 150 on that. It closed at what? 1 second. Closed at 1466. So yeah, I mean we could see maybe 150 honestly. So I mean that's a 10x on the shares from where we are currently. So I'll be playing options on that as well. More shorter term. Where I see fit. But yeah, I'd enter shares. Like I said, over here, DJ and I, we don't really gamble, right? We're making these educated identifications and acting accordingly. So what we're focused on, as you guys can see, low risk, high reward. So that's what we're focused on. So we're into playing safe plays with significant upside, and it's always proven to be effective. So yeah, that's why I'm looking at the shares currently. IV is still high, right? So once we enter a real correction, I'll go ahead and enter the calls. But before then, I just play it safe. When I'm fairly confident, like I was on Monday, or sorry, Tuesday, I'll enter like a short-term weekly call like I did. But other than that, I'll alert the shares and I'll alert that in the group when I see fit. SK asked, I see FUBO getting a lot of attention on Twitter. Any thoughts? I haven't looked at that myself. I don't know. DJ, have you looked into that ticker?
Yeah, it's a very heavily shorted stock, so it's just getting the same treatment as the rest of the meme stocks at the moment. I know I've written out like a paragraph for these. Like Ramg said, we don't really like to gamble here, and we like to make more educated plays, but that doesn't mean this isn't sort of a quote unquote once in a lifetime situation to get rich, I guess. So, I mean, everybody at the end of the day makes their own decisions. So, all of those heavily shorted tickers, I mean, at the end of the day, if you want to play them, we don't recommend it, but you could. And I mean, those are really hard to alert. It has nothing to do with technicals. It has nothing to do with analysis. It's just it goes up when it goes up, and it goes down when it goes down. So there's really nothing we can do there to sort of guide you in those plays. So I mean, it's up to your individual risk levels tolerance, I guess. If you want to play that part, I wouldn't recommend it myself. We're looking more into macro movements and how we can profit with, like an 80-90% success rate, and we don't really want to take 50-50s.
Yeah, exactly. Yeah. Next question. Yeah, Joza said, I looked at UVXY, it went up higher than VIX in March. Yeah, correct. Yeah. So, yeah, I see a lot of upside there. That's why I'm playing those ones. Za asked, what could be the pros cons of buying additional CCIV calls at further expiration dates, 40 strike versus the February expiry, i.e., March, August? Um, I mean, it's pretty similar, but we're kind of betting on a more nearer confirmation of merger. So we're in the February calls, which I think should do well. They're doing well already. I mean, obviously, unless we get kind of a definitive no confirmation from the SPAC management or Lucid, but yeah, that's the reason there. DJ, you can briefly touch on that as well.
Sure. We went in February, $40 strikes. Those at the peak have already doubled. So if you scaled out, they should more or less be risk-free at this point. If you didn't scale out, you still could, or you can hold on to them if you didn't take a large position. I still like them as a very high-risk lotto. The reason I went in the highest strike in February calls is because they're the cheapest. The way I see the Lucid and CCIV deal is it either closes or it doesn't close. I don't really care too much about the option decay in between. Naturally, if CCIV stays flat or it goes slightly down, the February calls will go down at a faster pace than the March and August ones, of course, because the expiry is coming sooner than the other ones. But that's not the way I look at it, because I'm not planning to, sell for a flip unless it's a large spike that we can re-add, or I'm not planning to sell for a loss unless it's a definitive no. If it's a deal, the $40 February strikes will perform much, much better in percentage-wise than March and August because they're the cheapest calls. So the return on them will be greater. If it's a no, then all calls will be at zero, in my opinion, or maybe 10 cents. It really doesn't matter. Even if you're buying August calls, you're buying August $40 calls. If it's a definitive no, I'm pretty sure those would be maybe 50 cents at best. So the way I see it is, I expect a deal confirmation or denial within February 19, which is the expiry. I expect it in the next 1 to 2 weeks. So if it happens, it's a yes, it's the highest reward. If it doesn't happen, it's a no, it's the least amount of loss. And the time decay in between is something I'm not too interested in, because I mean it's a high risk lotto play, so I wouldn't want to cut it for any other reason other than it's a definitive no or yes. That's the way I'm playing around that.
Yeah, I think some people might have been a little confused because Grobin was kind of indicating, he's really confident on deal. I am too, right? I am too, but it's not like a guaranteed play here, guys. That's where I exited the warrants, if you remember, about maybe a week ago, last week, and then exited about half position in shares as well. So I recommended that. That was around high $19. We got that $11 entry, so really good. And then we took a small position, DJ alerted calls. This is the way to go because, like I said, I touched on it like 2 weeks ago. Gave my explanation there, but like I said, if there's a deal confirmation, we gap up 30, 35 maybe $40, and go from there, right? And then if there's a no confirmation, like I said, we're going back maybe $11 on the shares, maybe $1.50 on the warrants, and calls are worthless, right? So the risk reward is good, and that's why exiting these is fine, because if we gap up 30-35 on CCIV, that's fine, right? Because maybe we got that opportunity cost lost, or opportunity, the profit lost, but we just re-enter at 30-35, whatever it is, it gaps up to. And then, I mean, we write it up, because on a lucid confirmation, I can see the share price going to around 100. That's my price target. I could see it hitting that point. So I mean, there's that significant upside, that low downside with that strategy. So yeah, I mean, like I said, we're in the interest of getting those high reward, low risk plays. So that's the way to go, in my opinion. And those calls are good as a lotto, because unlike the shares, they'll increase exponentially, but your downside is only what you put into those calls. So there's that, which is why those calls are to be treated as a lotto, and then shares are a much safer play. So yeah, I mean, worst case as well on the shares, you can't really lose money. It won't go below our entry of 11.25. So I really think it'll go maybe 12.13 if anything. So yeah. Albert Pacino asks, so if we're in other SPACs close to NAV, like $10.50 to $11 a share, those should have limited downside to NAV, even in the worst case, correct? Yeah, that's correct. Yeah, that's why you'll notice if, in SV, for example, I still kept a position. SV is around maybe 10.70ish, I believe, if I last checked. I mean, our entry is like 10.15. We're not going to lose money there. It's fine, guys. So those SPACs close to NAV, like I said, pretty safe. That's why I'm still holding some of those new warrants as well. I chose to hold a smaller position, and then those warrants and SPACs that have already ran, like for example, VJC, what else, PDAC. We bought it at the dollar mark. It's going up to $4 now. It's a 4x, right? So I'm just thinking, my thought process was like, what are we doing if we're holding it, right? We're facing potential significant downside, and I mean, upside is where are we really going, right? Without a confirmation, maybe $6, right? So I mean, there's limited upside, a lot of downside possibilities. So I thought it's best to exit these, just to be safe. Anything near NAV, it much safer as well. So we will continue holding those positions. How can you determine NAV on the warrants 1.5? It depends on the SPAC specifically, but generally it's that 1.5, either that or a dollar mark. It depends on the specific SPAC though. So yeah. Yeah, it looks like that's all the questions for today, and we've been running pretty long, guys, about 2 hours. So yeah, well, wrap it up here, guys. DJ, did you want to add anything there?
Not really. I think we're good.
Okay, yeah, sounds good. Yeah. So yeah, going into next week, we'll continue monitoring the markets. We're very well poised for a potential correction, guys. We have a large cash position, small position in equities, and we're holding a decent base position in those May SPY puts. Like I said, very safe puts. Those May SPY puts. No worries there. Even if it goes down, even if I'm expecting a bounce on Monday, so they will go down there. But like I said, continue holding those. We're very well poised for a correction if it occurs. So we're very safe. We'll be continuing to play it accordingly as we identify these trends in the markets, and we'll be continuing to watch those charts and technicals to see where we go. It's times like these, it differentiates the good traders and the bad traders. in the market, there's going to be winners and losers. You're either on one side or the other. So we're always looking to be on that winning side, always playing it safe in these times of volatility, but capturing that upside potential quite significantly. So we'll be continuing to watching, guys. We may enter a few earnings plays depending on where the market is, and going from there. So yeah, guys, we'll be alerting all those accordingly. So not to worry. NTG should do well, and a lot of great potential on a potential downside correction. So there is that. And yeah, guys. So other than that, we'll be watching the markets, and yeah, we'll be back on Monday to go get this money, guys. So I hope everyone has an amazing weekend, and yeah, take care.
Yeah, cheers everyone. Enjoy the rest of the weekend.